Hi, welcome to the section about money laundering by property flipping, where real estate is bought and sold after a short period. An example of property flipping is that the buyer pays more than the documented price in the purchase agreement and the notarial deed for the real estate. A few months later, the buyer resells the property for a higher price. The value increase of the real estate hereby generates a seemingly legal profit and dirty money is integrated. The following example illustrates this illegal practice in more detail. In this example, the criminal buys real estate with a market value of $700,000 for a documented price of $500,000. A payment of $200,000 with dirty money is not documented. This is followed by selling the real estate on the market for $700,000. The result is that the criminal claims to make a legal profit of $200,000. Please notice that it is suspicious if real estate is sold after a short period at a higher price. A variant is that an offshore company buys the real estate to conceal the criminal origin of the dirty money. Another trick is to renovate a property using criminal funds and resell it for a higher price. The value increase as a result of the renovation is that the criminal obtained funds are also integrated. Hi, let's finalize the fixed asset part with signals that enable you to recognize potential money laundering. As illustrated in the previous section by property flipping, asset valuation can be manipulated to launder criminal funds. But valuation manipulation can also be used for more assets for which it is difficult to determine the value, such as art, jewelry, horses and old-timer cars. If assets are bought for a low price and underhand criminal cash is paid, the asset can be sold at a higher price to integrate the money. The criminal does not mind to pay taxes. It's a low price to launder the illegal proceeds. Following red flags are signals for potential money laundering using fixed asset valuation manipulation. A red flag can always be planted if offshore parties are involved in buying the property or other assets. And, as already mentioned, be aware if property is resold shortly at a substantial higher value. This value can be out of line compared to the prior transaction price, the current selling price or market value. A substantial value increase can also be caused by renovations funded by criminal cash. Another question mark can be raised if company profit is too low to justify the level of the paid rent or market value of the real estate. How can the company be able to own or rent the property? Besides real estate, if any assets are difficult to value, independent valuation expertise can be needed to investigate potential money laundering. This section finalized the balance sheet topic of the annual account. If you have any questions, please don't hesitate to send me a message. Next part explains the profit and loss statement, the difference of the profit and loss statement with the cash flow statement, and how you can signal money laundering if you analyze these documents.